All right, here's a question I want to pose as we go into this. Do you ever feel like you maybe are income rich but cash poor? Do you see other people taking advantage of opportunities and you go, well, why not me? Do you feel like maybe you work all the time to just try to keep up with the expenses in your life and you've never figured out how to get off that hamster wheel from the rat race into what we would call the wealth interface? Stallion, if you were going to help them with the first step of this, what would you tell them to do and why?
Well, I think it's good for us to think about the passive income operating system in three steps. Because if it's just this big system and we don't break it down, it can get overwhelming and potentially keep us from starting. And so if you think about this in three steps, you got organize, store, and then automate. And under that organize step, have you ever heard of the book Profit First by Mike Michalowicz? We had him on our show, and at the end of the day, his idea, to be honest, the first time I heard it, I thought, this is dumb. I mean, it's too simple. Like, all he does is he's created these multiple accounts, and all he's doing, he's taking the same dollars and moving them around. And at the end of the day, it's like, my kid saying, hey, Dad, I ate everything on my plate. And all they did was move the food around on the plate. You're like, okay, I didn't fall for that. Like, finish your food. But it's the same amount of money. It's just moved around. But the power of it, when Russ, you and I took that seriously, we implemented in our business, was it started to force us to say, hey, when I make my income, my income comes in and I force down the amount that I have to pay for bills, whenever that money comes out and I don't have enough for the bills for the month, all of a sudden it's a red alert. It's a, Joey, you guys spend more money than you think. Well, I need to dive into that. I need to take a minute to figure out, where did that money go? What was I spending more money on than I thought? It's a governor of sorts to say, I need to stop spending or allowing that lifestyle creep to take over. And then in this organized phase, we're implementing an income account and then having a separate expense account so that we can be better stewards of the money that we have and not allow it just to kind of just on autopilot or default continue to leak through our hands. Because if you don't have that money accounted for, how can you ever have the most amount of money to put into your storage container, the storage container that will then get you into the position to make opportunities happen, as you mentioned, Russ? So this step, it seems simple, but it is crucial to making this system work for you. If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
If you've ever had like a health coach, nutritionist share with you ways that you could help get more healthy, and it usually comes down to a lot of portion sizing, right? Surely the foods we eat are important, but more times than not, it's the amount of food that we eat. So I had a nutritionist give it to me in a very simple thing. Said, if you put your hand out, that's about the size of protein that you should have at every meal, right? Like just the palm of your hand. That's the size of protein if it's a meat protein. Well, then if you cup your hand, that's about how much vegetables you should have. And they would go on and on. Well, what you were talking about there in this organization phase, Joey, is that we need to be proportioning out the money that's coming in and not just sticking it all on one plate, or like we do, like as we enter into the holiday season, there's going to be this just tray of this bevy of food all over the place. And the worst thing you can do is just walk up and just start picking, right? You have to get it on a plate so you can portion size it out so you know how much you're taking in. I think that that's a big mistake people make with money, is that they just start picking away as they want to. And like you said, they never know how much money they're spending. And in business, we operate off something called a profit and loss statement. We live and die by this. If you're a business owner, you know, every single month you look in there to see what is it that you're spending money on? How did it measure up against the previous month or the previous year? And you want to make tweaks around that. Without those data points, you don't really know what's happening. But how many of us are operating like that in our personal finances? How many of us have built out a personal profit and loss statement where our income is isolated, where our expenses are known, and now we're able to see what this true cash flow is left over? Jamie, what do you think is one of the areas within Organize that people need to better understand so that they can maximize this component?
Well, I don't know how lame your Thanksgiving is. There's no portion sizing going on in my Thanksgiving plate. It's just gonna pile on there, and I'm gonna try and eat it all. That's just how it works. And it's kind of similar to how I was managing my finances for a very long period of time. It didn't matter how much or how little came into my account. I just knew what I had to go have fun with, or go to dinner with, or spend next month before I got paid, or next week before I got paid, by what was in my one checking account, right? And it was just a horrible way of managing and understanding what was even coming and going. So I think the first step for Organize for me is really the basic understanding of what is coming in and what is going out, right? Starting there, really trying to get that profit and loss like you just talked about. But then it goes a little bit deeper to organizing thoughts around what we're doing with that money. So organizing our thoughts around why we're spending money, where we're spending it, organize our thoughts around maybe where that money is being spent before it ever hits our income account, and really trying to think about what we want to do with our future and what we want to do with those finances. And for me, that's where the organized piece comes in. It's a combination of thoughts and actual finances that we're trying to organize.
So good. What about for you, Ern?
We're talking about creating the operating system to create passive income. So the assumption is that's the goal. And for most people, that's not the goal starting out. So we're coming from somewhere. The previous goal is typically something like, I want to accumulate enough money for retirement. So the prescribed operating system for that method would sound something like this. Okay, take the first portion of your money that you're able to store away and put it into your 401k so that you can get the match. And then take the more money above that and go max out your Roth IRA. And once you've maxed that out, then come back to the 401k and fill that up. And if you max that out, then go and max out an IRA. And if you max that out, then go fill up your kids' maybe some 529 plans to save for their college, for their future. You're able to get there. And so the prescription, if you will, in the traditional method, if I'm looking at that correctly, is to invest in the stock market, invest some more in the stock market, and then finally invest in the stock market through some accounts that you'll use for your kids' colleges. That's what's happening there. This isn't the podcast to say not to do that, but people who are looking to create passive income need to do something else. And so we're talking about being very granular in our income and expenses so that we have as much money left as possible to go store somewhere else to create a different outcome. And I would just point out in setting up this operating system where we might have been coming from.
So good. If you want to go find out these details and have a kind of a step-by-step walkthrough, go to wealthwithoutwallstreet.com/PIOS. That's PIOS for Passive Income Operating System. And we've actually broke all of this down for you in a very easy, implementable way with lots of tools that we have found to be the most effective helping us becoming financially free and helping hundreds, if not thousands of others do the same thing. So go to wealthwithoutwallstreet.com/PIOS. So we kind of broke down the first step, organize, right? If we've done this step well and we've organized our cash, we actually should have money left over, right? Like we haven't kept it in our business if we're a business owner because we're fearful of spending it, because we've set up a system, we've organized it, like you said, Joey. We know it's going to be spent every single month. We've left money on the plate that we can now send over to go to work for us, right? We need that money working as hard for us as we work for it. And we're going to send that money across the line to something that we call a dividend paying whole life insurance policy. Now, We do that because we're looking for three major components. We're looking for the money to be liquid. We're looking for it to be tax efficient. We're looking for it to be protected. That's the reason why we're not going to use qualified plans, because we can't access it. It's not liquid. That's the reason we're not going to use the markets in general, because it's not protected, because we don't ever sell, regardless if it's the market's going up or the market's going down. We always have this fear of missing out. And we don't use cash, which is the most shocking for most people, is because cash has one of the most expensive costs, because once we spend it, it is gone. We can't have it again. So I want you to break down for me, when you heard about this for the very first time, Joey, I want you to describe the amazing person that was sharing the idea with you, but also want you to talk about how it how it impacted your life as you started to implement it. Because those who've never implemented this idea we call the infinite banking concept, using dividend paying whole life insurance, really don't understand probably why others do it. For you, what was the biggest reason?
Well, this is not a small idea. Okay. And the second thing I'll say is it's not a suggestion, right? Where you store the money matters. If you're going to go to the trouble of creating a system that we're talking about, and you're going to want to optimize that for your family, so you're not stealing from their future by letting water drip through your fingers, right? You can't hold on to it. This system will help you put the leaks, like close the leaks up, so that you can make the most of your money to create financial freedom as fast as possible, because you can't afford for the time to slip away. Okay. If you're going to do this, then where you store the money has to be the most optimal place. And when you shared this with me via Nelson Nash's book, Become Your Own Banker, there was something very interesting about that time in my life. There I was working for Wells Fargo. And you're like, hey, by the way, this wasn't actually in the book. They did talk about the fact that banks invest in large amounts of cash value life insurance. And I'm like, why would they store money there? Right. So I go to the bankers around me. Like, these are the regional managers, the higher ups within the bank. And I'm like, hey, I'm learning about this whole process, Become Your Own Banker. They talk about this cash value life insurance being a good place to store cash. And you know what? Not one of them said it was a good idea. They all thought, they said, Joey, that's dumb. Nobody puts money in whole life insurance. It's like the worst asset class you could ever think of. And simultaneously, on the balance sheet for Wells Fargo was $19 billion of cash value life insurance. The very people that I was talking to at the bank were insured by the bank because they were putting large amounts of cash value into the life insurance on their lives. And they were completely unbeknownst to them that that's where this money was being stored. When I understood that, then I just said, don't overthink this, just follow the recipe, right? This is where big banks are storing their cash. Why wouldn't I do the same thing? And then for all the many reasons that you can learn about in our courses and in that ebook that you shared, this became a complete no-brainer for me.
No doubt. What about for you, Jamie, right? Like, there was a time where I think Joey was sharing with you what he had done, and you were looking for input as a client. Talk a little bit about how this made a difference in your life, and where did that light bulb click, and how did you implement it?
Yeah, I mean, there's been so many different light bulb moments. Thanks, Joey, for that. I know you had a great teacher that taught you everything you know. But I mean, one of the biggest ones was connected to my investing journey. It was connected to understanding what I like to call like the efficiency of money. People say velocity of money, but the efficiency of a dollar. How can we make a dollar work best for us? And what I mean by that is, once I started investing in real estate, I was using my own capital at one point in time. And then I started using other people's capital to go do my real estate deals and make a profit on my flips, which freed up my capital to do something else. Right. And then I got introduced to IBC, and now my dollar's doing three things at once. But the one very kind of aha moment was, as a good real estate investor, I was holding, CapEx reserves, maintenance funds. I was just holding cash and checking accounts in my real estate business and a business checking account, doing nothing. At the same time, to Ernie's point, I was trying to figure out how to plan for my kids' future. I was putting money in 529 plans, still doing all the traditional things that I was told to do to be a good steward of my money. But I knew that I had the power to do more with my money if I had it in my control. And through a conversation with Joe, you said, well, why don't we do both, right? And asset. Why can't we do both things with that dollar and look at starting policies on your children that you can use for the next 18 years while they're growing up, and then still have it growing in a place where you could then use it for college or a car or a wedding or a house or whatever that looks to be for them. And so I was able to just redirect what I was already doing the money, store it in a more efficient location, have access to it, and plan for my children's future all at the same time.
There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Ernie, I want to come to you because I think this is interesting. Your situation tends to be very different because when you started down this road of setting up whole life insurance policies on your life to implement the infinite banking concept, you were single without kids. And that is not the typical way that we have. Most people that come to us are married with kids, and the death benefit is an important aspect, not the most important, but definitely an important aspect. Why did this resonate with you?
Yeah. So I was 22 when I learned about this, but that story actually starts when I was like 14. And I sat in on a Financial Peace University class, getting dropped off at my parents' church after soccer practice. And so I got exposed to graphs that go up and to the right. And I really like that. When I was 16, I drove home from soccer practice in my 85 F-150. And my grandmother's financial advisor had flown down to spend some time with my parents and talked me into putting $1,000 in a Roth IRA with the idea that being 16, that money could grow until I was 22 out of college and could pick back up contributions, and that would turn into just a fabulous asset for me. And so I went through college, and when I graduated, moved to Birmingham and met you guys. And on the first day of working as an intern with you guys, Russ, you gave me the book, Becoming Your Own Banker, and I started to learn a different way of money. Now, the college I had gone to was private, and private is another word for expensive. And I had $35,000 of student loans that I was dealing with, in which the monthly payment was $405 a month. And at that time, that was a large percentage of my income. And so I was reading the book, considering, well, I've got this Roth IRA I'd like to contribute to. I've got these student loans I'd like to pay off. But here's a method. Here's a process where I can become my own banker. I can build up access to cash, and it happens to be a whole life insurance policy. And rather than paying down the student loans or contributing to the Roth IRA, I can build up the capital in an insurance policy to pay off the student loans if I wanted to. And so I made that decision. And you're right, Russ. I was a sink at the time. That's single income, no kids. But I knew one day that I really wanted to be married, and I, second behind that desire by about 600 miles was I'm going to have kids one day. And so this will be really important for that time. And so I set up an insurance policy, and actually, speaking of death benefit, wasn't really important to me, but it became really important to the insurance company, and that they're like, whoa. We need to dial this back. This is a little much for you right now. So we'll let you get this much. And I accumulated the capital to pay off those student loans. But in the short time that it took to do that, I realized, well, shoot, rather than paying off loans and freeing up $405 a month, I could do some investing and pick up this rental property that creates $600 a month. And off to the races. That was the beginning for me. And I left that, I pulled the money out of the Roth IRA. When I got married, I pulled the money Caroline brought from some brokerage accounts. And we plugged that through our operating system, and I've continued to build passive income since.
Well, Tribe, did you hear that? He dropped some gold right there. A couple of things that was evident that you may or may not have heard him as he was breaking that down. He was talking about what they did with the money. He had an option to pay off the debt, but as he had been learning how to become an investor, he said, option A is pay off the debt and free up $405. Option B is take the same capital and buy real estate and it produces $600. That's an easy mathematical equation. Remember, financial freedom is when your passive income exceeds your monthly expenses. So in that example, it was 600 versus 400. Which path should he have gone down? It sounds like he chose the right one. That's a question I know that you have that you're trying to figure out. When do I invest? When do I pay off debt? Well, if you understand that formula, then you can apply it to every decision to help you make the right decision for you, right? The decision is for you, but understanding what those options are, so important. I'll share this for the person who's listening for the first time. They maybe didn't hear me share this the last 100 times I've talked about it. But for me, when I was sitting there in January 2009, I'm reading that book, Becoming Your Own Banker, for the very first time. And Nelson Nash is identifying the evident that's happening, the obvious, that banks take your deposits and turn around and lend them out to people who need loans. And a lot of times those people are in your family. And he was saying, and they make a good living off of it. The bank does, right? The margins off what they pay you as a depositor and what others pay them for the privilege of using your money. Because that's what they're doing. They're lending out your money, not their money, your money. And my father-in-law was sitting there with a good deal of cash on hand because we had sold a bunch of stock the previous year as the market was crashing. And we were both nervous of what to do. So we were just sitting on cash. And my wife took out a $700,000 loan through Bank of America as she was building out her dental practice right at the end of 2008. And I thought, wait a second. He just sold Bank of America stock and it's sitting in a checking account at Bank of America. And here we are signing the documents and paying, $7,000, $8,000 a month in payments to Bank of America. And it's really her dad's money. What if we just cut out the middleman? What if we just said, hey, why don't we take this money that's in the checking account, pay off that debt, and then turn that $7,000 or $8,000 a month back toward him? And in his situation, Ernie, he didn't know where to get $7,000 or $8,000 a month in income. He was terrified, as I was, because of all the things that were going on in the marketplace. It was still very volatile early on in 2009. Nobody knew if we were going to go right back through what we just went through, what new balls were going to be dropped, and what new bombshells were going to come out from the financial sectors. We have 300 to 500 banks going belly up a year at that point. And he thought, this is pretty good. This dental business has less than 1% default rate because dental practice, everybody needs their teeth fixed, right? They're going to keep needing them regardless of what's happening. So this is a pretty good bet. And it's his daughter. He felt pretty good about what she was doing. And we built this Becoming Your Own Banker system truly like a bank. Like we were doing family banking. And he used that cash flow and bought an insurance policy on my wife's life. Now that's almost 15 years ago. And I sit here and I look at that insurance policy and the amount of cash value that it's accumulated, well over $550-something thousand the last time I looked at it. And it's been used to create probably twice that in different investment revenue because he's used those same dollars, as you were talking about, Ernie, to do other things. So it wasn't just that one thing. That was just the seen. The unseen were all the other investments. Man, where we store our money is so important. So you're following at home. We got 3 steps to this, as Joey said from the beginning. We have to organize our cash flows. We have to then get that cash flow and store it somewhere that we can have it liquid, protected, and tax efficient. But the third step, and this is crucial for a lot of us, is that we need to automate this process. We need to make sure, regardless of our personality profiles or the things we have going on in our life, we don't fall short of that last mile. Joey, what's one of the ways that you have seen this automation benefit you in your life?
2 things. One, because of the vehicle we're using to store cash, it's automatically on a daily basis gaining interest. Like that's important for a bunch of different reasons. But if you're anything like me and you maybe sit on cash in a lazy area in a checking account, it's not gaining interest and it doesn't have opportunity until you tell it what to do. This, even while you're waiting for it to tell it what to do, it's going to grow automatically. But the second thing, and I alluded to this earlier, is by automating the cash flows where the money is being pushed down to my expenses, it is the greatest hall monitor for my cash. It is the one that says, hey, wait a minute, look over here, red alert, there's an issue because the amount of money you sent to me isn't enough. And why is it not enough, right? And again, go back to that profit first model. It seems simple, but as soon as you start moving money automatically into the right places, it starts to tell you what you need to know about your money, where the problems are, the leaks are, and you can go and fix those things and become as efficient as possible.
That's so good. If you've been reading this ebook, the Passive Income Operating System ebook, and you've not taken action, let me call you to the fact that you're never going to start any sooner than right now, right? Let's go. Let's get started. Let's make this happen in your life. And one of our coaches will literally walk you through this process and help you understand what the right next thing is for you. If you go to what'swhatwallstreet.com/free call, you can jump on a no obligation phone call with them and they can walk you through what those steps would look like for you. Jamie, tell me a little bit about how has this automation step benefited you in your life?
Man, the automation step, Joey, that was perfect setup to how it helps me with those automations, with understanding that money's flowing automatically to expense account. And I know exactly what I should have left over or what I end up having left over. That money then flows right into my IBC system, right? It automatically flows in there. What the automation portion has done for me has simplified my decision-making process. And what I mean by that is it's really, you said it, the greatest filter for cash flows. I know what I have going out every month. I know what I have coming in every month. And then I know what I have in my stockpile or my storage container, my warehouse, right? And so then it becomes a simple accounting process of knowing how much do I want for an emergency fund? How much do I have coming for taxes this year estimated? And then what is the opportunity fund to go invest with, right? What is available to go make a decision, to go make an investment, to build more passive income to feed back into the system? And it's just simplified that process from how I was doing it in the past, where I had 4 business checking accounts, a personal checking, a personal savings, an IBC policy, and it was money everywhere. And it just took so much time and brain power to try and compile what was actually available. I just didn't make any decision a lot of the time because I didn't want to go through that process.
Yeah, we can become like the lion. You've seen the circus where there's this lion tamer. He's got the 3 or 4-legged stool and this whip, and he's pointing at this lion. You just think this dude's about to get mauled, right? You're like, this is not going to work. I would not change places. But for some reason, that lion is not doing anything. He's not coming after him. And what they say is that the lion sees each item, the 4 legs of the stool, the whip, the lion tamer himself, whatever else, the shotgun standing behind him, I don't know, all as threats. And because there's so many different threats, he doesn't know which one to attack, so he does nothing. And what you were describing, Jamie, is like my life before this, when I was thinking through all of those pieces, the mental gymnastics that needed to be done, and I just didn't want to do it. Like that was one of many things I will procrastinate on, right? I would rather go out and cut the grass, and I didn't cut the grass since I was in junior high school, but I would rather go cut the grass than deal with all of those bills and all of that stuff. The time when I learned this process and we automated the transfer out of our business on the 10th and the 25th, it went into the specific account that then sent the exact amount of money to my expense accounts that it called for, sent the rest over into my IBC system. That money then was being allocated for the business expenses and the investment opportunities and the tax hold that I had. And those systems and all of those cash flows were being redirected into that same hub. And it was happening on autopilot. It was like a praise moment, right? Like I was standing in the tent out in the middle of the desert, just hallelujah. Like this was awesome. How about for you, Aaron? Tell us, how has this process benefited you?
Yeah, well, not about me first, but do you know how you get how a person with a high I personality gets stuff done? Or you get somebody else to do it. How stuff gets done. That's the power of this automation. And at the end of 2016, I had met this guy who some people that I admired said, this is the most productive person that I know. And many people said that. And I was like, oh, that's interesting. And I had an opportunity to hear what he does. How do you get stuff done? And he held up his yellow Levenger pad and he said, every day I create a new pad and I write down the things that I need to get done today. And then I do those things. And so for me, at the end of 2016, and Russ and Joey, I know you can vouch for this. Every week, I have taken on a Levenger pad and I've written down all the things that I want to do this week personally and business-wise, and I go get those things done. True?
In 4 font.
That's right. Size 4 font. Yeah.
And right next to your turkey sandwich with the broccoli that you brought for lunch.
The spinach.
Spinach, excuse me.
That's right. And for the last 6 months, I've made myself write out my schedule. Now, since 2016, not a single time, well, that's not, I'll say over the last 3 years, as I've dialed in this system, I don't want to lie, over the last 3 years, as I've dialed in this passive income operating system, not one time has insurance related things made it onto that pad. This is so easy. It's so easy. It's so automatic. It doesn't even make my weekly attention pad. Now, recently, Caroline and I have been talking about a big challenge that we've been having, and that's getting our stinking tithe brought to the church. And why is that? Why is it so easy to operate this system where we're dealing with all of our money? And why is it so hard to get the tithe brought to the church on once a month on the Sunday morning? And that's because our checkbook keeps bouncing around. At this moment right now, I don't know where my checkbook is. It could be in her car, it could be in my car. It's not in my office, which oftentimes it is. It could be on our kitchen island. I don't know. And because we don't have a set system of how we get that check written and brought, it just hasn't been getting done. And so we're bringing it once every few months. That's been our challenge. We need to correct that. So what I'm saying is the passive income operating system is easier than tithing because it's automatic.
Oh my goodness. Well, I hopefully we've added a little humor in your day. We've also given you some practical steps of how to organize your money, a place to store it, because the goal is for us to create passive income that exceeds our monthly expenses. But how do we make this easier, right? We have enough stuff in our business and our kids' activities, all the things going on in our life. I mean, just trying to figure out where our checkbook is. We need to automate as much as we can. And this part is super important for us. As we sit here today, we think about as we're heading into the holidays where we're going to spend a lot more time usually around family than we do on a normal basis. It's a great time to reflect. Well, what if I could have more time? What if I had a system that could give me that if I could implement it? So wealthwithoutwallstreet.com/PIOS is the ebook that will show you all of these steps so that you can do this in your life. Hope you found value in this. If you did, take a quick screenshot, share it, and tag us wherever you're posting at, that we know to create more content just like this for you. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.